today. So I want to show you. Let me just write something real quick. You guys know, you know how I plan my YouTube videos. I want to just type out something. Hold on. By the way, this is Trello. You guys know me. You know I use this for my planning my YouTube videos. This is Trello. You can use this if you're a trader and you want to plan your life out. I plan my fitness stuff on it. It will be in the link in the description if you want to use it at all. It works both on your phone and your computer. But yeah, guys, this is the only. This isn't what this video is about. This is just some other videos I was planning. This video is for smart money traders, SMC traders, if you trade ICT, anything like that, or even supply and demand, this works too. I wanted just to show you guys and give you guys a refresher on market structure. And I want to let you know your job as a trader. So if you're a trader and you're in the market, whether you trade forex or futures, your job, if you're buying, is to buy low and sell high. And then if you're a seller, is to sell high and buy low. It's to sell high and buy low. So here's what that's gonna look like. The market doesn't just go down forever in a bearish market, right? Because it has to retrace and come back up before going down. Your job is to enter on these retracements. When you're buying in any market, forex or futures, the market doesn't just go straight up in a straight line. The market just goes up, down, up, down, up, down, up, down. Your job is to simply enter on those downs before entering on those up. Sorry, your job is to enter on those downs before the market goes up. When you're selling, your job is to enter on those ups before the downs. That's it. End of video. I'm just kidding. But no, that really is it. And then what determines your ability to find those ups before the down and those downs before the ups is market structure. Because when you have a clear idea of the trend visually on the screen, you can see where specifically those ups and downs are, so you can enter off of. That's what the purpose of market structure is. If you're ICT trader, smart money trader, blah 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 trader. So how I trade, you guys are probably familiar with change of character and all of that. Instead of change of character, I use break of structure. You can use whatever you want, but I use break of structure, and that's going to look like BOS instead of change of character. So I'll explain to you what a change of character, break of structure is, and also what a COS is, because you guys probably haven't heard of COS. COS stands for continuation of structure. So if you're in a bullish trend, and every single time you're in a bullish trend and we have new highs formed, right? We have a new high, a new high, a new high being formed, then that's called a COS, continuation. We had a new high being formed here. Now we're continuing the trend. We're continuing the trend that we were already in. So that would be called, that red line that I just drew here, right there. That red line would be called labeled COS, continuation of structure. And I'll even do it. I'll even put COS. I'll put it in the blue. So we'll take the gray arrow and we'll put the COS there. And then like that. So that would be called that would be your COS. So your COS is your continuation of structure, the continuation of the trend. And then when you're in a bearish market, right? Let's say you were bullish, and then now price is coming down and disrupting that bullish trend because it just took out one of your highs. One of your lows. And now that it disrupted, we have another red line, and I'm going to make it blue I'm going to make it green instead of red. Now we have a green line. Now what does the green line mean? So the green line is the BOS. So that's the BOS, or you can look at it as a change of character, COH, change of character. And so now we have the BOS. So we have COS and we have BOS. So our COS, we established that was a continuation of structure and a continuation of the trend that we had. And then the BOS is our break of structure. Price is breaking one of our structures, and now we are headed towards a new trend. So a break of structure, it's breaking, it's disrupting the trend. COS continuing the trend, BOS disrupting the trend. Okay, so I'll even write that down. So you can write BOS, and you can put equals disrupting trend, and you can put COS equals continuation of trend, right? And I'm going to put spaces here so you guys can see this and it's not sloppy, so you can clearly see what I'm talking about. So BOS COS equals continuation of trend, disruption of trend. I want you to screenshot that, and I want you to screenshot this from the video no matter where you're watching it, and I want you guys to write this down so you have this. Okay, COS equals disruption of the trend, or you can look at it as a change of character. And BOS is disruption of the trend, the green line, and the red line in the visual representation that I drew, the red line, the COS is a continuation of the trend. So when price is making new highs that are a part of that trend. So if you have in a bullish trend and it keeps making new highs to go up and continue it, that's a COS. And once that's disrupted and the market reverses and goes the opposite direction, that's a BOS, or a change of character. They call it a change of character because that's what it literally is doing. It's changing its character because the character was the market going up. You see what I'm saying? But now, yeah. So this video wasn't meant to be a long ass video. It was meant to be a short video, and I hope you guys can screenshot this little visual representation. That I'll do this later, huh? Yeah, I'll screenshot it later. Now let's go in the market and let's look at some examples of this, and let's actually do this, and let's find some market structure. So right now I am currently on oh yeah, here's a great example. I'm on ALJ, Australian Japanese dollar. I know you guys probably wanted me to use futures. I'll use that after. Like NAS. I'll do that. Actually, you wanna know what? I'll use NAS now because I actually have a good example on that too. So, here's a good example. Here's this first example is gonna be continuation of structure. So the trend right here is is bearish because we have new lows and new lower highs and lower lows. Because we have this current low, I call it our live low because that's the live price action, right? Now, what's the first step we do that I didn't do? Zoom all the way out so you can see what's relevant. Because when you zoom all the way out on TradingView, like I'm doing now with my mouse, it's going to make the market structure tiny, showing you all of the highs that are actually piecing and structuring this trend, which is bearish. So the blue lines are what's structuring this trend, which are our current low, current high, previous low, and previous high. We don't need to necessarily sit here and actually label each one of these highs and lows. We just need to put the highs and lows that clearly state and clearly show us that we're in a bearish trend, like here, right? So here we are in a bearish trend, and by these blue highs and lows. And I'll show you guys that we have two examples of the continuation of structure. So the first example of our continuation of structure was right here when the trend was still bearish. We had a high right there where you can see to the left of the screen. Yeah. So we had a high right there, and after this high, we had all this unhealthy bearish price action come down and break and form a new low. And so that would be, and here's the line. This red line is representing the continuation of structure that I talked about at the beginning of the video. So this red line is where price broke out and took out that low right there where the gray arrow is. This was the low where I'm pointing to now, and price came and broke through this with bearish price action. And after it did that, we had a COS. So we can take our text tool here and we can put COS because that's COS, and then okay, Here's the second one. That's the first one. The second one, we have actually three. We have three. The second one is right here. After we had that COS, price came down, and what did price do? Prices can't just drop forever, because that's called unhealthy price action. Balanced, every market will eventually get balanced out. And that looks like price coming back to fill in inefficient price action. Whether it's filling in supply and demand zones, gaps. So we had a new low here, and price came back up with blue price action, and price came down again and broke another low, which was here. This is the low that got broken right here. This low right here, right? Where I'm putting the red line. This other low right here where I'm putting the red line is where price got broken. So we will also label this as a COS, continuation of structure, right? So that's two so far, and we have more. Okay, so these COSs, like I keep saying, stand for a continuation of structure. They're continuing the trend. The trend is bearish. Every time we have a new low being broken, we're continuing the trend. After we had this COS, and then this low where the gray arrow was pointed to, this low is the new low. And so once this new low broke, which was right here, that's another continuation of structure, right? And it's the same thing. And so a breaker structure would be this, right? I'm going to draw out the breaker structure because it's not actually in the market yet. So the blue line that I'm about to draw represents, the green line represents the price action I'm adding to the market, right? So right now, if you look at the bottom of the screen, what I'm drawing that green line. So if price came down, if price came from this point, you see where price is right now. If price, hold on. What the fuck did I just do? If price came down, right? If price came down right here, right? And we came up, and price came up from that low point, instead of going down, and instead of going down like it's supposed to and creating a new low, what if prices shot up and broke our high, right? That's a break of structure. Usually that means that smart money, the ones that are in control of the market, that have the most money, are pushing the market, pushing orders bullish or buying, and that's causing the market to reverse and change the trend. And so we can label that with a green line, and that red line I'm drawing is going to be green, and we can actually call this a BOS because this is a disruption. So a COS is a continuation, and a BOS is a disruption. So the green price action, the green that I'm drawing, if that happens, that would be a BOS. That's an example of a BOS, a breaker structure. And so when I'm looking for, if I have bullish price action on the 1 hour, but then on the 5 minute, we see all these red COSs, continuation of structure that's bearish, then I actually need to see a BOS. So that's usually my major confirmation I get into my most trends. Because on the higher time frame, you can say, okay, my trend is bullish, but how come my trend is bullish on the higher time frame on the 1 hour, but on the 5 minute it's bearish. So if you know it's bullish on the higher time frame, your job is to be patient and wait for price action to jump and break and disrupt the short-term bearish trend on the smaller time frame. You see what I'm saying? So that's what you're basically doing. And I didn't want to make this video too long. I just wanted to pack it with some value for you guys. And if you have any questions, ask me. I have a Discord that's free. It's a free Discord for like-minded traders that want to come and share their ideas with other people, network with other traders, or traders, if you trade a different strategy than this, that's cool too. I'm not pushing my strategy on anyone. This is just a methodology that worked for me and that I like to share with people on YouTube. And so, yeah, guys. I don't have any courses or anything like that. I do have a PDF that's basically a framework that goes more in depth of this method and also explains my personal step-by-step strategy that I use weekly. So it's a 50-page framework guideline that I have. It's just on my website. I have that if you guys are interested. It's not anything crazy. I have that. And I do one-on-one coaching if anyone's interested in one-on-one. So if you're a trader and you just can't find a consistent strategy that you can use, that's a step-by-step, if you don't have a piece of paper that has a step-by-step strategy on it, right now that you can go every single week and trade with, then you definitely need either coaching. If not coaching, you need to either figure out a strategy as soon as you possibly can, because if you don't have a step-by-step strategy, how are you going to be consistent if you don't know what you're doing every week? You need to be doing the same thing every single week until it works, because that's what a consistent trader and a profitable trader is. It's your ability to find setups, and if you can't find setups because you haven't been training and practicing and studying, then why would you be a profitable trader? So yeah, I hope this video really did help you. If you have any questions, ask me. I have Instagram. Text me. Show me your charts. Screenshot your charts. But yeah, guys, peace out.